YouTube. My name is Ty with the Dividend Stock King with another video. Today we're talking about the stock market. Today's April 4th, 2025, and my message to everybody who's worried about the market going down, the market being down. First of all, I'm not a financial expert. I'm not getting financial advice in this video. I'm just giving my opinion. The market being down is not a bad thing, right? It's not a bad. It's not a bad thing at all. The market being down is not a bad thing, because number one, you could buy stocks ETFs at a cheaper price, right? That's the benefit. That's the big benefit. Now, if you're retiring, this is why I like income funds. If you're retiring, yes, I can see where, because 59 and a half, you start withdrawing your 401k and Roth. I can see where you're down 20% or 10%. I can see where, and you have stocks you got to sell. I can see where it may hurt you, right? But this is why I always encourage people. Look, from my understanding, with a Roth IRA, you could pull out dividends tax free in the Roth. That's why I'm under the impression, because you must have your account for 5 years, and you're only 59 and a half to withdraw your distributions tax free. So that includes dividends. So you get dividends all this time for years, and you're 59 and a half. You're not planning on selling on stocks. You're just planning on getting the dividends and reinvesting it. So when you're 59 and a half, I'm gonna start pulling out those dividends tax free. If the market's down like it is now, you get lower dividend payments, but you'll still get income. You still get dividends. So the only downfall is you have a 401k. You want to take money out, your account's down. That's bad. Okay, that's the only part. But you must understand with the stock market. That's the stock market. That's the risk taking in the stock market. That's everyone's risk who invests in the stock market. That's everyone's risk. That the market goes down and up. So you want to retire and the markets go down, like in March 2020, it happens, right? I mean, this is the nature of the beast. This is what the risk taken in the market. Just like if you buy a house and you want to rent it out, you might buy, a house that had a lot of issues or electrical problems you didn't know about. That's a risk you take. No different. You buy a car off the lot and a used car, and you don't do your due diligence on the car, and it may have some problems with it. That's a risk you take. And the stock market is no different. It's a risk. You take the risk if your price going down and your price going up. That's why that if you're in the dividend investor, it's not going to bother you too much, because your dividends will be lower, but you can buy more shares cheaper. And this is why that if you want to live off dividends, right? This is a prime example with YieldMax. Your dividends will be lower. When the market goes down, when the price goes down, the ETF, your dividends will be lower, right? That's it. Your dividends will be lower. You can't escape that. So you must make sure you had a buffer. If you need 5,000 to survive, you need to make at least 7,000, or even 8,000, because when your dividend goes to $1 and goes to 40 cents, that cuts half your income. So you're gonna need, if you need five, you need to come to the number you need, and you need to have that times three. I said go $8,000. So you need 5,000 to survive. You need at least 8 to have that cushion. So if Coney and Tesla was paying $1, and then they're paying 50 cents, your dividends cutting you for $1,000. You have 1,000 shares of Tesla, and it pay $1, you get $1,000. But now it pays 50 cents, you get $500. You got cut $500. So you need to make sure that you have, what is your target goal income, and you need 3,000 to 4,000 above that. If you goal is get 10,000 a month, you need to get like $14,000 a month for a cushion. So on the worst case scenario, if you want 10,000 and you hit 15, the worst case, you probably make $8,000, which is still nice. And you must make sure that in your dividends that you need to have a cushion. Even if you were to hit 5,000, you need to live off 3, because if you hit, whatever happened with the ETFs, you need to live below the 5,000. So below the 10,000. So if you need 10,000 to survive, make that 8,000 to survive. So the 8K to survive. My goal is 10, but I need to get 13. So it's a 3-step process. I need 8,000 to survive, to live. My goal is 10,000 for a little cushion, but I need to get to 14,000 for the bigger cushion. So if you make a 14,000, but you drop to like 8 or 9,000, that's fine, because that is your goal anyway. You're safe. You're good. So the market being down is not a bad thing. It just makes your payment a little lower than your max. But guess what? You still own the shares, and they're gonna pay you by the amount of shares you own. So at the end of my video, the market being down is not a bad thing. The media makes it be, it's so bad. The market goes up and down. Take advantage of it. Get more shares. Own more shares. And when that price goes back up, you can reap the reward of buying it low and the price go up and go high. And the common thing with the stock market, everybody knows this, you buy low, sell high. Well, if you go old school, buy low and sell high, then this would be your buy low and sell high moment. Thanks for watching.